Of the stock market. Today is February 13th of 2024. So today we just got CPI data, came out harder than expected, and so we're seeing how the market's reacting to it. The US 10-year is breaking out to the upside, right now sitting at 4.279, up 2.34%. If you look at the dollar is also breaking out to the upside, up 0.65%, DXY, breaking out of this range. Next up for the dollar right now, at least major resistance area, is 106 area. When we look at stocks, look at the SPX, down about 1.12%. This is not a time to be going long. There's some people that might be tempted to want to go long because they are still in the mentality of FOMO, fear of missing out. You don't do that. The dollar is strong. The US 10-year is strong. No reason to go long, especially with the breakout to the upside for the US dollar. You look at the QQQ. That is the NASDAQ. Down 1.28%, breaking down. Also going lower right now. But the big one, if you look at, is the IWM, down 3%, back to its 50 MA, the support at around the 10, 20, and 50 MA. Again, higher yields, higher dollar, bearish for equities, especially for the IWM. I'm expecting equities to continue to head lower, especially with the strength with the US dollar. As long as the US dollar doesn't reverse from these level and continues to trudge higher, which I believe it will trudge higher, expect equities, especially IWM, to head lower. So one name to, now looking at just individual stocks, one name to look out for is AFRM Holdings. This is a company that basically is into lending, payday lending, not payday, what do they call it? Pay as you, buy now, pay later, loans. So this is down 9.82%. This is one of those names that is very interest rate sensitive. The fact that CPI data came out harder than expected means that the Fed is not likely to cut rates in the near future, So this is one name that, of course, is going to react more strongly to it. It's a good short. I'm expecting this to head actually much lower from here. Next major support area, minor support, I could say, is 38. But next support area, I would say, is the 20 MA for the weekly, so that's around the 34 area. Yeah, that's also the 100 MA to on the day, around the 100 MA on the daily. That's the 32.88, 33 area to 34 area. That's the next major really support level. This is a good short even right now. The market has had a little bit of a bounce, but this is not the time to be going long. I think this head continues to head lower, as I said earlier on. Another name that I like as a short is ARK Invest. Falling back to the 10 MA, bouncing off of it, but I expect it to continue to head lower as yields continue to rise and the dollar continues to rise because of hot inflation data. Looking for this to head down to the 44.70 area, and then we'll see how the dollar and the US 10-year is trading at that time. So back to the IWM, but this is the US 2000 USD, so this is the futures for IWM. Down 3% at 3%. Yeah, it's getting, like I said, it's getting a little bit of a bounce. But if you look at it on the 30-minute, 1-hour chart, this is just like an oversold bounce. It's setting up for lower. Let's look at this at the 12-hour chart. Not much. Not much. The only thing, like I said, from the daily, look at it, is right back to the 50 MA. This has been major support. It came down here January 17th, based around here from February 2nd to February 8th, went back up, we're back again. One thing about the market is that if a stock touches a specific zone, either it's a support or resistance zone multiple times, the weaker that zone becomes. So the 50 MA has held, for the Russell futures for the past month, you know, couple months, the past month, and this is the third time it's going to be going back to this area, third, fourth time, you know, and the more it goes back to this area, the weaker this area stands to be the weaker this area is a support area, you know. So I'm expecting this to actually head lower, you know, break through this, and I'm looking for the Russell to head back down to the 1890 area, you know, or let's see or back to let's see, what is the 20 MA on the weekly? 1870 is a stretch. I could see that going back to even to the 1870 to the 20 MA basically. 20 MA on the weekly area. That would be a good support level to go long if you really want to go long. Back to the dollar. Like I said earlier on, as long as this is showing strength, this is breaking out to the upside. This is not a time to be going long, you know. Back to the US 10-year. Again, breaking out to the upside because of inflation data. It is now officially in an uptrend, you know. So again, not the time to be going long. The best stocks again to play this are the interest rate sensitive stocks. So the high beta names like ARK, names like AFRM, you know, that are into lending. Even other names like XLRE, you know, REITs, utilities, those are all interest rate sensitive sectors. Those are good names to play, you know, if you want to benefit from this short-term rise in the dollar and the 10-year, you know. Let's look at XLU as well. Good names to play. Looks very weak, you know. Until we get, you know, so until we get a change in price action with the US dollar and the 10-year, it is not the time to be long, you know. And if you are somebody who's not comfortable going short, which is fine, it's the best time to stay in cash. You know, wait until the market pulls back and watch the US dollar, watch the US 10-year. If you begin to see any bearish price action, you know, out of the US dollar, the US 10-year begins to make maybe lower highs and lower lows on a smaller time frame, maybe on the 1 hour, 2 hour chart, and you begin to see maybe bullish divergences begin to develop in the SPX and the QQQ or an IWM, and that's the time you can now begin to say, okay, let me go long equities. But let me say this again, I am still bullish on the market, and that's because we are still, this year, there's a certainty that they're going to cut rates, you know. Just that this inflation data keeps pushing back the time that in which they're going to cut rates, but they are going to cut rates. So we are going to enter a rate cutting environment, and the market knows that. So any pullbacks are going to be limited. You know, if you're expecting a crash, it's more likely than not they are going to be disappointed. Until we get a pullback, if it comes to some good support levels, you buy. So for SPX, I don't think we talked about support levels. For the SPX, for example, if you want to look at a support level, a good area would be around this 48.60 level, you know, 48.44 level, and see how it reacts there. For the QQQ, we'll go back to it. A good support area would be the 50 MA, you know. I think this visits the 50 MA, you know, so maybe by the time it visits, maybe the 50 MA will be touching around 416. That would be a good spot to go long. And back to the IWM, a good spot to go long would be around maybe 187 area. But again, you also have to ensure and remember that you have to keep the US dollar and the US 10-year, you know, on your radar. You know, if we're back to those levels, which I talked about for SPY, QQQ, and IWM, and the US dollar keeps breaking up to new highs, then don't buy, you know. Because at the end of the day, everything matters. What matters is the US dollar. You know, it's the most important index you should have in front of you. So if we are beginning to get maybe like a breakdown, maybe we're seeing something like some sort of this type of breakdown in the US dollar, it's gapping below, maybe because of some new news that comes out that is that shows a weakening in inflation, and you see it coincide with the SPX, the QQQ, IWM going down to support levels, then that's the time you buy. So for now, like I said earlier on, if you want to short, you go for interest sensitive names like XLRE, utilities, Affirm, ARK Invest, you know, those type of names. You go shorting if you want to make money from this current direction the US dollar is trading in. Or if you're not comfortable shorting, like I said earlier on, you just stay in cash. Let's see. Let me also look at the semis. Semis are showing strength, but again, this is not the time to buy. Honestly, I do believe that today's price action in semis was more of a bull trap. You know, I'm expecting this to head lower, you know, to take out these lows. If you look at the semis, for example, they're still very overbought. You look at it on the weekly chart, it's about 73. You know, the RSI is at 73. You know, very overbought. And we're having this with the rising dollar breaking out to the upside. This is not the time to be going long. And like I said earlier on, I believe that today's price action in semis is more of a bull trap. So you don't want to be going long. In fact, this is the time I would rather say you go short. Picking some ideal SMH puts are not a bad, you know, trade at this point in time. Even AMD, getting into an AMD puts are not a bad trade at this time. I see the AMD heading right down to this 50 MA, you know, and so that's some easy money that can be made. Let's look at software names, IGV. Yeah, IGV back to support levels. These are some major support levels. It's bouncing off of it. I expect it to head lower from here as well because of the strength in the dollar and the 10-year. Another good spot to short as well. You know, back to the 10 MA, which initially acted as major support, now should be major resistance because of price action in the dollar and the yields. So a good spot to go short if IGV. First major support area is the 50 MA, you know, and then we'll see from there. Okay, I'm out.